By tracking contract ratios within our Phoenix market, it gives you an idea of where the hot spots are, where you have to be aggressive when purchasing a home. And also the same with selling a home. It lets you know what is a seller's market versus what is a buyer's market. So I want to go over and just show you a quick heat map that I use so I can share with my clients of what we use to examine the properties. And right now it's mid-January, and we are expecting some more explosive growth here coming up due to the drop of interest rates. And we have a lot of sellers in the past and buyers that have been thinking or wanting to sell, but they couldn't do it because the interest rates were at 8%, and now they are down to like 6 3/4. And again, with things coming up, happen in the future, rates are supposed to be dropping. So here's a quick summary of, let me jump here, show you what I'm looking at. First of all, the contract ratio indicates how hot a market is. It specifically measures the number of completed sales contracts relative to the supply of active listings. It's defined as 100 times the pending listings divided by the active listings. The higher the number, the greater the buying activity relative to supply. If this number rises, then it's a sign of growing contract activity and a positive signal for sellers. Conversely, if a falling number is a sign of a weakening market, either the supply of active listings is increasing or contract activity is slowing, or both. In a balanced market, for a normal market, the segment of the value of the contract ratio is usually between 30 and 60. When it lies below 20, the market can be considered slow or a cold market, or above 60, it's considered a hot market. And when it moves above the 100, we regard this evidence as a buying frenzy. And in the high luxury segment, the normal level is usually lying between 15 and 25. That was the definition by the Cromford report, so I just wanted to set that out there. And here's where I go to the heat map. So starting right here, we are looking at the map of Phoenix Metro, and as we can tell right now in December 30th, we're looking at here in Tolleson. Tolleson is actually kind of a hot market. It has been, and if you're looking to buy investments or market, that's a good place to go. But this is back in December. So we're going to jump up here to January. We can see a little bit of the activity picked up. We're going to go from this bluer areas, which is a little bit colder. You're going to see it start warming up into the greens. As we go to January, we're going to see start things picking up again. A little more green. Mesa right here. That's getting a little bit hotter as well. January 13th, look at this, Buckeye. Buckeye just picked up, and the same with all along here in the lower East Valley. And a few up here off of the I-17, and right up here, that's right there by Desert Ridge, 85054. Actually, Desert Ridge is going to be right here, but that's just east of it. Okay, so that's where we're at. But as you can see right here, Tolleson, it's hot. The sections of Glendale is still pretty hot. Mesa is hot, which is kind of surprises me, is right here, 85254 isn't really going up. I thought it'd be a little bit hotter than that. So if you're in these areas, you're going to be competitive. If you're a seller, you're going to be looking good. But please note that this is still early January, and we're expecting our market to explode. But I just wanted to share that with you. I'll update this again next month, and just give me your thoughts. I'm Eric Carleen with Realty One, 602-492-2897. Thanks.